All right. So let's take a deep dive into these reports about the euro and the U.S. dollar.
Okay.
We've got this article from Pound Sterling Live, and it's looking at the week ahead.
Okay.
Plus, we've got some technical analysis so we can really dig into those charts.
Yeah.
It seems like the big question that everyone's asking is, will the euro bounce back against the dollar?
Right.
And if so, when?
Yeah, it's fascinating stuff. I mean, seeing the euro at a 2-year low is pretty remarkable.
Yeah.
And the Pound Sterling Live article is even suggesting that it could reach parity with the dollar
Wow.
later this month. But as always, the currency markets are complex.
Yeah.
There are so many factors at play.
Absolutely. And, the article really highlights this U.S. exceptionalism
Right.
as a major factor.
Yeah.
Basically saying that the U.S. economy seems to be thriving while the Eurozone is, kind of struggling.
Right.
But I'm curious.
Yeah.
Is it really that straightforward?
That's a great question.
Yeah.
I mean, while the U.S. economy definitely has some strong points right now, like low unemployment, the exceptionalism narrative tends to overlook some of the nuances, both within the U.S. and the Eurozone.
So it's not as simple as just saying one economy is inherently better.
Exactly. It's really important to remember that the Eurozone is made up of 20 countries,
Right.
each with its own economic landscape.
Yeah.
So, Germany, for example,
Yeah.
might be going through a period of slow growth, but it's still a manufacturing powerhouse.
That's true.
Globally.
Yeah.
Yeah.
So we can't just make these
sweeping generalizations.
Yeah, these sweeping generalizations about the whole Eurozone.
Yeah.
What about, flipping it to the other side? Is the U.S. economy really as exceptional as this article is suggesting?
Well, that's where things get interesting. While recent economic indicators, like the jobs report, have been positive, some economists are actually arguing that there are underlying issues, like income inequality.
Yeah.
That could actually put a damper on long-term growth.
So they're saying it's not all...
It's not all sunshine and roses.
Yeah, sunshine and roses. Okay. So you're saying it's crucial to look beyond just the headlines.
Absolutely.
And really consider, kind of that bigger picture.
Yeah, the big picture.
Now, this whole interest rate differential keeps popping up.
Yeah.
And the article really argues that it's drawing investors to the dollar.
Yeah.
And driving up its value, compared to the euro.
Right.
Can you kind of unpack that for us a bit?
Yeah, for sure. So when interest rates are higher in one country, it tends to attract investors who are looking for better returns on their money.
Okay.
Think of it like you're choosing between two savings accounts.
Okay.
You'd probably go with the one with the higher interest rate.
Yeah, of course.
Right. In this case, those higher interest rates in the U.S. make dollar-denominated assets more attractive.
Okay.
Which pushes up demand, and then that pushes up the value of the dollar.
Okay, that makes sense. Now, let's bring in that technical analysis that you provided.
Right.
It seems to paint kind of a bearish picture for the euro.
Yeah.
At least in the short term.
Yeah, short term.
It mentions these 50-day and 200-day moving averages, which are both trending downwards.
Right.
For those of us who aren't,
chart wizards.
Yeah, chart wizards. What does that actually tell us?
So those moving averages are kind of like trend lines, giving us this smoothed out view of price action over time.
Okay.
When both the 50-day and the 200-day averages are sloping downwards, it basically suggests that the euro has been consistently losing value against the dollar.
Okay.
It's a signal that downward trend is probably going to continue.
Okay.
At least in the near term.
Okay, so not exactly a sign that a euro rally is about to happen.
Yeah.
The analysis also mentions the RSI being below 50.
Right.
Now, remember, that's a momentum indicator, but can you explain what that means for, someone who's maybe considering a trip to Europe?
Sure. So the RSI helps us figure out whether a currency is overbought or oversold.
Okay.
An RSI below 50 generally suggests that the euro is oversold.
Okay.
Which means it's fallen more sharply than maybe its underlying fundamentals might suggest.
Interesting. So does that mean that now is a good time to buy euros and hope that they'll bounce back?
Well, that's where things get a little bit tricky.
Oh, okay.
While an oversold condition can sometimes signal a potential rebound, it's not a guarantee.
Right.
There are other factors, like the ones we've been talking about, that are still at play.
Right. So no easy answers when it comes to currency market.
No easy answers, no.
Now, the article from Pound Sterling Live mentions that the recent U.S. jobs report really boosted the dollar.
Right.
It seems like good news for the U.S. economy isn't so good for the euro.
Yeah, it's kind of a seesaw effect there.
Why is that?
The jobs report exceeded expectations. It showed strong job creation in the U.S.,
Okay.
and that signals a healthy economy, which in turn makes investors feel more confident in the dollar.
Okay.
And it also suggests that the Federal Reserve, the U.S. central bank,
Right.
might not need to cut interest rates anytime soon.
Okay.
And that further strengthens the dollar.
So strong economic data in the U.S.
Yeah,
can actually put downward pressure on the euro.
precisely. And it's not just the jobs report.
Okay.
This article also points to the upcoming release of U.S. inflation data
Right.
as a key event to watch.
Yeah.
And this data is super important because it can actually influence the Fed's decisions on interest rates.
Okay. Yeah.
Yeah.
The Fed is always trying to keep inflation in check.
Right, exactly.
But how does U.S. inflation data
Yeah.
affect, like, the euro-dollar relationship?
So if inflation is higher than expected, it could force the Fed to raise interest rates sooner to try to cool down the economy.
Gotcha.
And those higher interest rates in the U.S. would probably widen that interest rate differential
Right.
that we were talking about earlier
Yeah.
with the Eurozone,
Right.
which would make the dollar even more attractive to investors and potentially push the euro down even further.
So this inflation data release is a big deal for
Yeah.
anyone who's following,
The euro-dollar pair.
the euro-dollar pair. It seems like the overall outlook kind of favors the dollar for now.
Yeah, for the moment.
But both sources that we've got
Yeah.
do kind of hint at this possibility
Right.
of a short-term
Yeah.
euro recovery.
Right.
Pound Sterling Live actually uses the word correction,
Yeah.
suggesting that the euro might be technically oversold.
Right.
Can you explain what that means?
Sure. Oversold in this context means that the euro's decline might have been a little too fast,
Okay.
and it could be driven by, more short-term factors.
Yeah.
Rather than a fundamental shift in its value.
Okay.
Imagine a pendulum swinging too far in one direction.
Okay, yeah.
It has to swing back eventually,
Right.
at least to some degree,
Yeah.
at least a little bit.
So it's like a rubber band snapping back after
Yeah.
being stretched too far.
Exactly.
But how would that correction actually play out?
So we might see the euro bounce back a bit against the dollar
Oh.
as traders take profits on their short positions.
Gotcha.
Or we could see a period of consolidation where the euro-dollar pair kind of trades sideways for a bit,
Okay.
allowing the market to digest recent developments
Right.
before it makes its next move.
Okay, that's a helpful way to think about it. Now, our technical analysis also mentions that if the euro breaks above a certain resistance level,
Right.
that could signal a more, substantial bullish reversal.
Yeah, a real turnaround.
Yeah.
Yeah.
How likely is that scenario?
So it's definitely possible, but it would probably require a few things to happen at the same time.
Okay.
We'd need to see some weakness in the U.S. economy, maybe a disappointing inflation report, or a slowdown in job growth.
Okay.
On the flip side, some good news from the Eurozone,
Right.
like better than expected economic data,
Yeah.
or signs that the European Central Bank is maybe thinking about tightening its monetary policy.
Okay.
Those things could also contribute to a euro rebound.
So it's kind of this tug of war
It is.
between these two, economic giants.
Exactly. And let's not forget about that wild card mentioned in the article,
Oh, right.
the Trump factor.
Yeah. The Trump factor.
Yeah.
The article suggests that he might not be too happy about such a strong dollar,
Yeah.
since it could hurt his efforts to rebalance the U.S. economy.
They could.
How much weight do we give to this?
It's a good question.
Yeah.
Political events,
Yeah.
pronouncements definitely have the power to influence currency markets,
Right.
although how much they influence them can vary.
Oh,
In
no.
the case of President Trump, his pronouncements can be unpredictable,
Yeah.
which could actually inject a lot of volatility into the euro-dollar exchange rate.
So it's not just economic data
It's not just numbers.
that we need to keep an eye on. The political climate matters too.
Yeah, the political climate matters too.
But we've focused a lot on the U.S.
Right.
What about Europe?
Yeah.
Are there any specific political or geopolitical events happening in Europe that we should be aware of?
Well, the big one is that Brexit negotiations are still ongoing.
No.
And the outcome of those negotiations could have a huge impact on both the euro and the British pound.
Right.
Any unexpected developments there could create ripples across currency markets.
Wow.
Including, of course, the euro-dollar pair.
So the UK leaving the EU could create a cascade of uncertainty.
It could. It really could. And then on top of that, you've got those ongoing trade tensions
Oh, right.
between the U.S. and China. Any escalation or de-escalation of those tensions could also have a big impact on global markets, currencies included.
So it seems like these geopolitical risks are always kind of lurking in the background.
They are. It's the nature of the global economy. But that's also what makes it so fascinating to follow.
It definitely keeps us on our toes. So, circling back to the euro, both sources seem to agree that we might not see a significant shift in its dynamic with the dollar until the second half of the year.
That's what it looks like. It looks like we might be in for a bit of a waiting game. But, as you know, currency markets, they can be unpredictable. Unforeseen events could easily change the current trajectory.
Yeah, absolutely. The Pound Sterling Live article suggests that one potential trigger for a euro recovery could be a major policy shift, especially from the incoming U.S. administration.
Interesting.
They think that President Trump might not want to see the dollar keep getting stronger.
Yeah.
Because it could hurt his efforts to rebalance the U.S. economy.
That's an interesting point.
Yeah.
A strong dollar can actually make U.S. exports more expensive.
Right.
Which could potentially hurt American businesses that rely on selling their goods internationally.
So Trump might actually prefer a weaker dollar to boost U.S. competitiveness.
He might.
Has he given any indication of where he stands on this?
Well, while he hasn't really been, vocal about his currency policy, there have been times where his comments have kind of hinted at a preference for a weaker dollar.
Okay.
For example, back in 2017, he said he was concerned about the dollar's strength compared to the Chinese yuan.
Right.
He was arguing that it was putting American businesses at a disadvantage.
So if Trump were to actively intervene in the currency markets, directly or through public statements, it could really shake things up.
It could, yeah.
Are there any historical examples of presidents doing this?
Absolutely. A really notable example is the Nixon shock of 1971.
Okay.
That's when President Nixon took the U.S. dollar off the gold standard.
Wow.
And that led to a big devaluation of the dollar.
Wow.
It really sent shockwaves through global markets.
Yeah.
And it had these lasting effects on the whole international monetary system.
Wow. So that's a really powerful example of how political decisions can have a huge impact on currencies.
Yeah.
So we've got this complex interplay of economic factors, central bank policies, and even political pronouncements.
Yeah.
All influencing this euro-dollar exchange rate. That's a lot to keep track of.
It is. It is. And it shows how important it is to stay informed and understand all these different forces at play in the currency markets.
Okay. So we've explored how that whole U.S. exceptionalism narrative, interest rate differentials, technical indicators, and even the Trump factor would all impact how the euro performs against the dollar.
Right.
But what about the eurozone itself?
Yeah.
Are there any internal factors that could potentially drive a euro recovery?
Of course. I mean, the economic performance of the whole eurozone is obviously going to play a role.
Okay.
If we start seeing, stronger growth numbers coming out of the major eurozone economies, it could boost confidence in the euro.
Okay.
And potentially lead to its appreciation.
So things like improved business sentiment or increased consumer spending.
Yeah.
Or even, a resolution to the trade tensions.
Absolutely, yeah.
Could all be positive signs.
Positive signs for the euro.
Yeah, for the euro.
Yeah. And we should also keep in mind the policies of the European Central Bank.
Right.
The ECB.
Yeah.
They're crucial. If they were to signal a move toward tighter monetary policy, maybe by hinting at future interest rate hikes, it could increase demand for euros.
And lead to the currency strengthening.
Right. Because higher interest rates in the eurozone would make euro-denominated assets more attractive.
Exactly.
Just like we were talking about with the U.S. dollar.
It's the same principle.
So essentially, we need to keep an eye on both sides of the Atlantic for clues about where this whole,
the euro-dollar exchange rate is headed. Yeah, absolutely. It's this delicate balancing act.
Yeah.
Understanding how all these factors play together is key to making sense of the currency markets.
Now, before we wrap up, I want to touch on something we mentioned before.
Okay.
This idea that the euro might be technically oversold.
Right.
You explain what that means, but how long does that typically last?
That's a really good question.
Yeah.
There's no set time frame for how long an oversold condition might hang around.
Okay.
It depends on the specific circumstances.
Right. And how all these different factors are interacting. Sometimes an oversold currency can bounce back really quickly.
Okay.
Especially if there's a sudden change in sentiment or some good news comes out that triggers a wave of buying.
Like a spark that ignites a rally.
Exactly.
Okay.
But in other cases, an oversold currency can just kind of languish for a while.
Right.
Especially if the underlying fundamentals haven't changed.
Right.
It might take time for the market to regain confidence.
Okay.
And for that buying pressure to build up again.
So even if the euro is technically oversold, it doesn't necessarily mean we'll see a quick and easy rebound.
Right. It's important to remember that technical indicators are just one piece of the puzzle.
Right.
They can be really helpful for getting insights into market sentiment and potential turning points, but they don't tell the whole story.
So it seems like patience is key.
Yeah.
When it comes to, navigating the currency markets.
Absolutely. It's a marathon, not a sprint.
Well said. Now let's talk a bit about what all of this means for you, the listener.
Okay.
We've covered a lot of ground, from economic indicators and central bank policies to geopolitical risks and the Trump factor.
Right.
But what are the key takeaways that you should keep in mind?
Well, I think the most important thing is to remember that currency markets are inherently complex.
Yeah.
They're influenced by a ton of different factors.
Right.
It's not just about economic data.
Okay.
It's about politics.
Right.
Global events.
Yeah.
Investor sentiment.
Yeah.
And even speculation.
So don't expect any easy answers.
Yeah, no easy answers. And the second thing is it's important to understand that the euro-dollar exchange rate, just like any other currency pair, is constantly changing.
Yeah.
What's true today might be completely different tomorrow.
So staying informed and being able to adapt is essential.
Absolutely. And finally, every piece of information, whether it's an economic report, a political statement, or even just a technical indicator, it can be a clue in this big puzzle of the currency markets. The more pieces you can gather and the more you understand them, the better equipped you'll be to navigate this dynamic landscape.
Okay, those are some great takeaways. Now, before we move on to our final thoughts, I want to pose a question to you, the listener.
Okay.
Both of our sources seem to agree that a major shift in this, euro-dollar relationship might not happen until the second half of this year.
Right.
So what global events or economic trends could trigger such a shift? What do you think might shake things up in the currency markets down the line?
That's a great question to think about.
Yeah.
It really makes you connect the dots and consider the bigger economic and political picture.
Yeah.
For example, what if the U.S.-China trade war ended?
Right.
And that led to, more global trade and a surge in Eurozone exports. Could that boost the euro's value?
Right.
Or what if there was some unexpected political instability in the U.S.?
Okay.
Could that weaken the dollar?
Right.
And give the euro some breathing room?
Yeah.
These are just a couple of possibilities.
Yeah.
I'm sure you can think of many more.
For sure. It's all about looking ahead
Yeah.
and analyzing trends
Yeah.
and considering those, what-if scenarios.
Exactly.
We've given you a framework
Yeah.
for understanding the factors at play.
Right.
But the real insights
Yeah.
come from taking that knowledge
Yeah.
and applying it to your own observations and predictions.
Absolutely. And remember,
Yeah.
what makes the currency markets so interesting
Yeah.
is that they're always changing.
Right.
There's always something new to learn.
Yeah.
Some new development to analyze and
Yeah.
some new opportunity to explore.
Yeah.
Absolutely.
So even though the outlook for the euro might seem a bit uncertain right now, it's not a time to be discouraged. It's a chance to really deepen your understanding of this, fascinating, dynamic world.
I couldn't agree more. We've really only scratched the surface here.
Yeah.
There are tons of resources out there. Books, articles, websites, podcasts, where you can continue exploring the currency market.
Absolutely. And don't be afraid to dive into those technical charts and indicators.
Right.
I know they can seem intimidating at first.
Yeah.
But with a bit of practice,
yeah,
you'll start to see the patterns and trends emerge.
You will.
It's like, ugh.
It's like learning a new language.
Yeah, exactly.
That opens up a whole new world.
The key is to stay curious.
Yeah.
Keep asking questions.
Keep learning.
And never stop learning.
Yeah. Who knows? You might discover some of your own insights that challenge conventional wisdom and help you make better decisions.
Well said. We hope this deep dive has given you a solid foundation and, sparked your curiosity to keep exploring this world. Yeah. Remember, knowledge is power.
Absolutely.
Especially in today's world. Until next time, keep those minds engaged and those deep dives going.
Definitely.
All right.
Sounds good.
It definitely does. The Pound Sterling Live article suggests that one potential trigger for a euro recovery could be a major policy shift.
Okay.
Especially from the incoming U.S. administration.
Interesting.
They suggest that President Trump might not actually want to see the dollar keep getting stronger.
Yeah.
Because it could hurt his efforts to rebalance the U.S. economy.
That's an interesting point. A strong dollar can actually make U.S. exports more expensive.
Right.
And that could hurt American businesses that, rely on selling their goods to other countries.
So Trump might actually want a weaker dollar.
He might.
To boost U.S. competitiveness.
Yeah.
Has he said anything about this? Like, what's his stance?
Well, he hasn't been super vocal about his currency policy.
Okay.
But there have been times when his comments have hinted that he might prefer a weaker dollar.
Okay.
Like, for instance, back in 2017, he expressed some concerns about how strong the dollar was compared to the Chinese yuan.
Right.
He was arguing that it was putting American businesses at a disadvantage.
So if Trump were to actively intervene in the currency markets, either directly or just by, making public statements, it could really shake things up.
It definitely could.
Are there historical examples of presidents doing this?
Oh, absolutely. One really famous example is the Nixon shock back in 1971.
Right.
That's when President Nixon took the U.S. dollar off the gold standard, which caused a big devaluation of the dollar.
Wow.
And it sent shockwaves through global markets and had these long-lasting effects on the international monetary system.
That's a powerful example of how political decisions can have a huge impact on currencies.
Yeah, they really can.
So we've got, this complex mix of economic factors and central bank policies and even political pronouncements all influencing the euro-dollar exchange rate. It's a lot to keep track of.
It is. It really highlights how important it is to stay informed and to understand all these different forces that are interacting in the currency markets.
Okay. So we've explored how, the U.S. exceptionalism narrative and interest rate differentials and the technical indicators and even the Trump factor could all have an impact on how the euro performs against the dollar. But what about the Eurozone itself?
Yeah.
Are there any internal factors?
Yeah, I mean, the economic performance of the whole Eurozone is obviously going to play a role. If we start to see, some stronger growth numbers coming out of the major Eurozone economies, that could boost confidence in the euro.
Right.
And potentially lead to its appreciation.
So things like improved business sentiment or increased consumer spending.
Yeah.
Or even a resolution to the trade tensions.
Absolutely.
Could be positive signs.
Positive signs for the euro, yeah.
Right.
And then the policies of the European Central Bank, the ECB, are also going to be really important.
Okay.
If they signal a shift toward tighter monetary policy, maybe by hinting at some interest rate hikes in the future.
Okay.
That could increase demand for euros.
Okay.
And that could strengthen the currency.
Right. Because higher interest rates in the Eurozone would make euro-denominated assets more attractive to investors.
It's the same principle.
Yeah, just like we were talking about with the U.S. dollar.
Exactly.
So essentially, we need to keep an eye on both sides of the Atlantic.
You do.
For clues about where this euro-dollar exchange rate might be headed.
Absolutely. It's this delicate balancing act. And understanding how all these factors work together is really key to making sense of the currency markets.
Now, before we wrap up,
Okay.
I want to go back to something that we mentioned earlier.
Yeah.
This idea that the euro might be technically oversold.
Right.
You explain what that means.
Uh-huh.
But how long does that kind of situation typically last? Will the euro bounce back immediately?
That's tough to answer definitively.
Okay.
There's no set time frame for how long an oversold condition might stick around.
Okay.
It really depends on the specific circumstances and how all those other factors are playing out.
Okay.
Sometimes an oversold currency can rebound really quickly,
Okay.
especially if there's like a sudden change in sentiment,
Right.
or maybe some positive news comes out that triggers a buying frenzy.
Like a spark that ignites a rally.
Yeah, exactly. But sometimes an oversold currency can kind of linger at a low level,
Okay.
especially if the underlying fundamentals haven't really changed. Right.
It might take some time for the market to, regain its confidence.
Right.
And for that buying pressure to build up again.
So even if the euro is technically oversold, it doesn't necessarily mean we'll see a quick and easy rebound.
That's right. It's really important to remember that technical indicators are just one piece of the puzzle.
Right.
They can be helpful for getting insights into market sentiment
Okay.
and spotting potential turning points,
Yeah.
but they don't tell the whole story.
It seems like patience is key when it comes to navigating these currency markets.
Absolutely. It's a marathon, not a sprint.
Well said.
Yeah.
Now, let's talk a bit about what all this means for you, the listener.
Okay.
We've covered a lot of ground here, from economic indicators and central bank policies to geopolitical risks and even the Trump factor.
Right.
But what are some key takeaways that you should keep in mind?
I think, first and foremost, remember that currency markets are inherently complex.
Yeah.
They're influenced by so many different factors.
It's not just about the economic data.
Okay.
It's also about politics and global events and investor sentiment and even just speculation.
So no easy answers or quick predictions.
Right, exactly.
Okay.
And the second thing to remember is that the euro-dollar exchange rate,
Yeah.
just like any other currency pair,
Right.
is in constant flux.
Yeah.
What holds true today might be totally different tomorrow.
So staying informed and being adaptable is essential.
Absolutely. And finally, I'd say every piece of information,
Yeah.
whether it's an economic report or a political statement or even a technical indicator,
Or-
can be a clue
Yeah.
in this big puzzle of the currency markets.
Right.
The more pieces you can gather and understand,
Yeah.
the better equipped you'll be to navigate this dynamic landscape.
Okay. Those are some great takeaways.
Yeah.
Now, before we move on to our final thoughts,
Yep.
I want to post a question to you, the listener. So both of our sources seem to think that a major shift in the euro-dollar relationship might not happen until the second half of the year.
Right.
So what could trigger such a shift? What global events or economic trends do you think could really shake things up in the currency markets later this year?
That's a great question. It really encourages us to think about the bigger picture.
Yeah.
I mean, what if the U.S.-China trade war was resolved?
Right.
And that led to, more global trade and a surge in exports from the Eurozone.
Right.
Would that help boost the euro?
Yeah.
Or what if there was some unexpected political instability in the U.S.?
Right.
Could that weaken the dollar and give the euro a little bit of breathing room?
Yeah, it's interesting to think about those what-if scenarios.
It is.
We've given you a framework for understanding all these different factors, but the real insights come from applying that knowledge to your own observations and predictions.
Absolutely. And the great thing about the currency markets is that they're always evolving. There's always something new to learn, some new event to analyze.
So even though things might seem uncertain for the euro right now, it's a great opportunity to learn more about this fascinating world.
I completely agree. We've really only scratched the surface today. There are tons of resources available if you want to keep learning. Yeah. Books, articles, websites,
Yeah.
podcasts.
Don't be afraid to dive into those technical charts and indicators either.
Yeah.
It might seem a little intimidating at first, but with a little practice, you'll start to see those patterns and trends.
Yeah, it's like learning a new language.
Exactly. The key is to just stay curious, keep asking questions, and never stop learning.
Absolutely. You might even discover your own unique insights that could help you make better decisions.
We hope this deep dive has given you a solid foundation and sparked your curiosity to keep exploring the world of currency markets. Knowledge is power, especially these days.
It really is.
Until next time, keep those minds engaged and those deep dives going.